Alright guys, just a quick example here of a very clean short setup. They don't always work out this cleanly, but I took some snapshots here and put some notes in there, okay? This right here, let me get my drawing tool going. This right here was the opening 5-minute candle, okay, for the morning. I think this happened yesterday, LNG. Just straight down. All I have here is the 8-period moving average and the 20-period moving average, both those lines. And what I'm looking for is the first bounce. Okay, now you know you've got a weak stock. Now I don't have the larger picture here to show you, but you always want to look at the larger time frame as well. This was coming down, flirting with the 200-day moving average at the time. But anyway, big sell-off. See a few green candles here, climbs up into what we call the sell zone between the 8 and the 20. Okay, and then you can use candlesticks for the entry. The first break of a previous 5-minute candle's low, which would have been right here, and the stop goes above that, okay? And I'll pan across here and show you the afternoon snapshot. You can see back here, that first bounce, how fadeable it was, right? There's the short, there's the stop, and the beauty of this is, and again, it doesn't always work this perfectly, but if you use that 520, okay, as your guide, and when you take the short, you place your stop here, rather than just cover it right here because you're so happy to make a few bucks, right? This is something I'm really working on here. Use this 520 and tell yourself, I'm not going to cover any until it touches that, okay? What does that do? That keeps you in this trade the entire way down here. You got a nice capitulation move here on volume. Yes, it's easy to see now that you could have taken some off or covered it all right there. But even if you just adhere to the rule and say, I'm not covering any until it hits the 520. What is that? About 1103 right there, and the short was probably around 1206, I think, if I'm not mistaken. So there's $1 in your favor. I think it was about a dime risk, and a great way to use moving averages and candlesticks in conjunction with each other. And that also works for a long. You have to flip the chart upside down in your mind, but it's not. It seems like an oversimplification, but it's simply that clean and easy if you have rules in place. Again, I wish they always worked out that way, but picture perfect example right there.